Good afternoon. Welcome to Midcap Radar. I'm Reema Tendulkar. With me is Sonal Bhutra, and it's a very listless session for our markets. We're just up close to about 0.1%. The story is really in the mid-cap banking space. The PSU banking index has rallied 2.7% for the week so far. It's up 5.5%. And just take a look at how individual mid-cap banks have performed this week. Not just today, but they've been rallying for the last couple of days. A Punjab and Sindh Bank 34% higher for the week. J&K Bank is up 24%. Bank of India up 17%. Earlier, we had that Morgan Stanley writing about how there is value left in PSU banks. Today, they've been backed by Credit Suisse. So now even the blue-blooded brokerages who generally used to prefer only those private sector banks, they're also now, talking about the PSU banks. So that's clearly given them a big leg up. But there is a bit of softness in IT and pharma.
Yes, there's some softness, but nevertheless, we are seeing some strength in the banking space overall that you just mentioned. Mid-cap side of things doing really well, and that is something that we'll discuss during the course of the show right now. So let's start the show with the top headlines, and then we'll discuss all the individual stories. Mid-caps outperform large peers in choppy trade on expiry day. Banks lead the charge. PSU lenders like Bank of Baroda and Bank of India get a fillip on positive brokerage commentary. IT and pharma slip.
Positive outlook boosts JK Lakshmi Cement. The management tells CNBC-TV18 the company is confident of maintaining 15% volume growth in FY23. Hopes to clock an EBITDA of 1,000 rupees per ton in the next 12 to 18 months.
L&T Tech slides in cautious analyst commentary. JP Morgan believes that the valuation premium is not justified given lower growth compared to peers.
Dharmaj Crop Guard builds on a good debut at the exchanges after the shares list at a 12% premium to the issue price.
Macrotech developers gains after it launches a 3,500 crore rupee QIP to meet public holding norms, while Triveni Engineering slips after over 11% equity changes hands, with the promoter likely to have divested near 7%. All right, those are the top headlines, and as we mentioned, mid-caps are really the stars of the day, and we have banking names too, which are doing really well. In the Nifty pack, if we talk about the stocks which are doing well, it's ONGC, because crude oil prices, they have come off $78 to a barrel, so that stock is at the day's high. We also have the other energy name, Coal India, which is doing well, so that stock should also come up for you on the screen. That is also high as we speak, but it's time to get a technical check on the markets as well. Let's welcome Pritesh Mehta, Senior VP Research at Yes Securities, for just that. Pritesh, good afternoon. Thanks a lot for joining us. We're choppy on the benchmark, but the broader market seem to be doing really well. It's the expiry day as well, the weekly expiry, that is. What do the charts suggest?
Yeah, good afternoon. I think we are at a point where we should be ignoring index completely. Yes, it is consolidating. It is, it is right now choppy, but the real action, the game is taking place outside the index. So basically, we have if you look at the ratio of mid-cap versus Nifty, that is reversing off from a support zone. So we have a potential outperformance of mid-cap stocks in next 4 to 5 weeks. So this is a space where major action is going to take place. And we have a scenario where breadth of the index is correcting, but index is not correcting. So in current scenario, we are not likely to see a big fall on downside also.
And stocks, Pritesh?
So in terms of stocks, since we are focusing largely on mid caps, there are the two stocks which comes to my mind, L&T FH. The stock is being offered a long period of underperformance. Now is showing strength. We see multiple bullish structures. In fact, on a point of figure chart, it is witnessing a bullish anchor follow through. So we are expecting a 10 to 15% move on the upside. The second recommendation is buy on M&M Fin. Again, stock is breaking out after a long period of consolidation. We can see, a bullish anchor follow through and total bullish breakout. So buy for an upside rally of 12 to 14%.
Okay, Pritesh, thank you so much for joining us, taking us through your technical picks and the market action as well. With that, we'll move on to our favorite segment, Mid-Caps Movers. We have Vivek to take us through the mid-caps that are moving around in trade. Hey, Vivek.
Hi, good afternoon. So, another day where we are actually seeing the financials and especially the mid-cap banks outperform. It's the smaller, pack as far as the banking space is concerned, but a lot of them are, flirting near the 52-week highs. First on our list, Bank of Baroda doing very well. Bank of India on the back of the upgrade by CS also is doing very well in today's trading session. Central Bank as well as IRB today at a fresh 52-week high. Some of the other stocks that we're looking at today that have hit a fresh 52-week high. Cigarette maker Godfrey Phillips moving up on very strong volumes as well. JK Lakshmi Cement earlier, they were on our channel earlier today giving good commentary, and Kamdenu as well. Some, marquee investors have entered this particular name and continuously hitting, upper circuits as well as doing very well in the session, this particular name. On the other hand, some of the stocks today that we are seeing that are moving up on very strong volumes. Venky's today is up almost 17%. Skipper, Star Cement along with the other cement names doing very well, and Bharat Forge too today hitting the volume circuit in terms of very high volumes. Looking at some of the names that actually are seeing a downtick in today's trading session, Five Star Finance after continuously hitting upper circuits for a couple of trading sessions after its results today seeing profit booking, GHCL, PTC India and Soba falling on the back of the negative news flow that came in yesterday's during market hours. So the downfall continues as far as Soba is concerned.
Okay, all right, Vivek. Thank you so much for joining us and taking us through those names. Skipper, by the way, is up 40% this month. Just figuring out what's happening in this one. But yes, so those are the stocks in focus today. For now, we'll slip into a short break. Up next, we'll be joined by Dhaval Ajmera. Welcome back. You're still tuned into Midcap Radar on CNBC-TV18. As promised, let's get in Dhaval Ajmera, who's the director at Ajmera Realty and Infra. He's joining us now to discuss the outlook for demand, especially after the RBI rate hike that we saw yesterday, the highest level since 2018, and it was a 35 basis points hike yesterday itself. Dhaval, good afternoon. Thanks a lot for joining us. Well, so far we have been of the view that yes, interest rates are not hurting demand, but there's another one, and there could be more. So what is the outlook here? At what point in time will these hike in rates start impacting demand?
So, I personally feel, yes, there has been a, hike in the interest rates. And, somewhere I feel home loans have also been at an all-time low, obviously during the COVID and post-COVID as well. But after that, what I see is today, people with the kind of real estate demand specifically, which I'm talking about, is where people are really looking forward for. And, demand is in a good position. People are wanting to buy homes. But I feel sustainability would be at when the home loans are, up till 9%. So if at all, it crosses 8.5%, 9% barrier, probably there will be some resistance coming in. But I also see that, public at large and people feel that this is a temporary phase. This might just be for a year or so, or it might just be for probably, 6-8 months. And post that, things will again come back to reality. And that's where, it is looking at, overall a good momentum in spite of a hike in interest rate.
Dhaval, once this 35 basis points of the latest rate hike is passed, won't most of the, home loan rates inch closer to 9%? Wouldn't they be at 9%?
They would be. That's what my feeling is. So probably, yes, still there, I feel the sustenance would be there. But I think if you have to frankly ask, at least, as developers, if it is going beyond 9%, I think a lot of developers will also take this as their part, probably, buy in something of the interest rate and not to pass on the entire thing, probably take up some of the interest rate factors till possession, so that the sales momentum continues, and everyone is looking at probably this as a temporary phase for 6-8 months, and probably then move ahead.
According to you, people are still viewing it as as temporary 6 to 9 month phenomena. Got that. How are inquiries in the month of October and November, and how would it compare with, say, 6 months ago? Any signs of things dwindling down or slow down?
So honestly, demand has been pretty good and it has been consistent. It's not that, we have a cycle, probably have some bit of curve here and there due to the, holiday seasons or Diwali or something like that. But otherwise, if I have to really look at it, the demand has been pretty good and, it has been encouraging. So if there is a launch, we have seen good projects coming in, good demand coming in, and people are looking at buying. So it's not that demand has slowed down over 6 months versus what it is today.
Okay. So in that case, what does it mean for Ajmera Realty? First half was strong. Of course, it was aided by the strong growth that you saw in the first quarter. Quarter 2 saw some decline, and that is something you had mentioned to us as well, that the 400 crores in quarter 1 had contribution coming in from a lot of new projects as well. How is second half panning out for you? Will it be as good as first half? What is the outlook on bookings and volumes?
So we are looking at sustainable volumes going on here. We had a great launch. Going from the launch, we are looking at sustained growth in our projects where we are doing. We are also gearing up to have a few, 2 or 3 more launches coming up in this 2 quarters. Primarily in Vadala, sorry, in Juhu, in Ghatkopar, and in 2 parts of the other central Mumbai projects. So hopefully these projects will also have good momentum coming in. Overall, we are looking at a great number coming over this entire year, looking somewhere. We feel that this will be one of our good numbers coming over the entire year. So hopeful to see a few more launches coming in
So
next
when
2
you say
quarters.
sustainable number, 566 crore rupees in the first half, will you be able to do 1200 crore rupees in FY23? Also in terms of volumes, you saw 0.2 million square feet in the first half. What is the outlook for the second half? What would it mean for FY23 when you say sustainable growth?
So when I say sustainable growth is, we had a primary, a big chunk coming from our Manhattan project, which was launched during the first quarter of this year. Thereafter, I am looking at a sustained growth in that. The demand has been pretty consistent, and we are looking at good numbers coming over there too. At the same time, with new launches in Juhu, Ghatkopar will also contribute to it. So in terms of, I would say volume, we are looking at good numbers. I wouldn't want to comment on whether we'll reach 1200 or 1100, but overall, it looks as a promising thing, probably higher than what we have done over the last few years.
What's the value of your unsold inventory?
So unsold inventory where we have today, which is ready, it is under about 50-80 crores, but under construction, if I have to say, which is under construction and not sold, would be in the range of about 600 crores.
Okay.
Plus Manhattan, which we have launched, will be probably more.
Okay, so you have launches with revenue potential of around 2200 crore rupees over FY23 and FY24. Will they start reflecting in FY24, or that is the time by which they'll get commercialized and start showing in your books by FY25? Any rough idea how much can you actually book in the next 2 years?
So, see, we have planned to launch in the next 2 years all these projects. This will start coming in our books probably FY24 onwards. Obviously, advance sales will start clocking in by next year. But I can't give you the exact numbers of figures where how much will be coming in FY23 or 4. But overall, with these 4 projects, we are confident that few will be launched this year. FY23, and probably 1 or 2 in FY24. But overall, we are looking to see that all these are getting launched and have in our books in FY23 and 24 both.
Just one final question, Dhaval. You said that, when interest rates hit 9%, there is some hesitation on the part of buyers, and perhaps real estate companies will do their part to make sure that the real estate sales momentum remains intact. What is it that you have in mind? How can you make sure the cost burden, the incremental cost burden, is shared by the real estate companies like yours?
So, see, it all depends on every project to project and a developer to developer. But primarily, I would say, some might just say that, okay, we have a fixed interest rate of 7% or 8% till the time of possession. So indirectly, you're bearing those 2% of your interest cost or waiver from the customer to the developer. So those kind of schemes, or probably a 20/80 or a possession related scheme, will probably kick in. So there are 3-4 things which, developer can really work in and pass on to the customer some benefits so that they continue with their decisions to book rather than waiting for the interest rates to go down.
Okay, all right. Dhaval, thank you so much for joining us, taking us through the business outlook, what the plans of the company are, and what is the impact on the business generally of rate hikes. So 9%, Rima, at that level across the real estate companies, they've told us if home loans or mortgage rates hit 9%, yes, there could be some demand
But
impact.
when this 35 basis points gets passed on, we are going to be very close to 9%, if not even cross it. Depending on what individual buyer's rate is. But we're going to get very close to that 9% mark. So the next one which comes, that perhaps is the one which will start hurting.
Yes, that's right. So that is all about the real estate segment, definitely in focus. But for now, let's focus on our segment Midcap Spotlight. The stock, of course, that I'm focusing on is Dharmaj Crop Guard. The stock saw a strong listing today, 12% higher. That is the 12% premium to issue price. Right now, also the stock is higher in trade. And at the current market price, the stock is trading at 32 times FY22 PE. So that, if we compare it with the other peers of the company, is on the higher side. So India Pesticides at 18.5 times, you have Heranba at 10.8 times, Bharat Rasayan at 24 times, Rallis at 27.5 times, and this IPO came at 27 times. So it is, of course, higher than that. The company is an agrochemical company which is into manufacturing, distributing, marketing of herbicides, insecticides across the agrochemical product chain, so to say. It is into antibiotics as well and exports to more than 25 countries like Latin America. There is East African countries, Middle East and Far East Asia as well. In terms of financials, company has been doing well. So that was one of the reasons why it got strong subscription as well. Revenues grew from 198 crores in FY20 to 400 crore rupees in FY22. In the 3 months of FY23, it has already done 220 crore rupees. Margins have been inching higher from 9% in FY20. It has come to 12.2% in 3 months of FY23. Profits also have been accordingly going higher. So yes, good growth prospects here as well. We'll have to see whether company is able to build onto this momentum or not. But yes, for now, the stock is higher and is seeing good listing gains as well.
Okay, thank you for that. Get into a break. We'll tell you more on the markets, individual stocks when we return. Welcome back. L&T is a stock which has hit a fresh 52-week high today, 2,150, a gain of 1.5%. And with the up move that we're seeing today, the stock's market capitalization has also touched 3 lakh crores for the first time ever. So that is one of the big movers. In the large cap space, we've been talking about Axis Bank with a 2.5% gain. Yesterday as well, the stock was higher, third consecutive day of up move seen for Axis Bank as well. But another stock which is in the news is Bharat Forge, and that's surging in trade after some positive commentary came in from the chairman and MD Baba Kalyani at the CII Global Economic Policy Summit 2022. He talks about the railway opportunity, how Bharat Forge is positioned. Listen into what he had to say.
There are pockets of opportunities where things are happening at a much faster pace. I'll give you the example of railways. The railways are undergoing some tremendous modernization. Just day before yesterday or yesterday, a tender was out for 1,600 locomotives of 9,000 horsepower. Siemens was the lowest bidder, 20,000 crores. It is all supposed to be produced in India in an Indian plant. In one more week, there's a similar tender out for 9,000 horsepower locomotives, which is going to come out, and then 200 Vande Bharat trains, and then 100 high-speed trains. Now, this is the kind of initiative that Mr. Vaishnav has taken in his ministry to create industrialization of the railway manufacturing system, which was somehow embedded in the last century for many, many years. And overnight, this is going to get completely modernized. What took Europe and America 50 years to do, India will do in 10 years.
Okay, that is some strong commentary coming in from Bharat Forge. The stock is up 4.5%. But with that, we have run out of time on this edition of Midcap Radar. Stay tuned. Mutual Fund Corner when we return.